Hello, everyone. Welcome to the 7-Minute Workshop. This is where we chat with experts to break down complicated and timely topics that affect your business. And we do it in just 7 minutes. After attending a wedding last weekend, I can definitively say that I learned it takes me longer than that to tie a bow tie. Okay, we are rounding out our theme of project management and profitability this month with the topic of project billing, its relationship with project accounting. We're going to talk about a typical billing process, the complexities around it, and how businesses can overcome those complexities. To dive into this, we're going to be joined one final time by NetSuite Vertical Product Manager, Adam Mayo. Now, quick reminder before we bring him on, if you have any questions throughout today's discussion, you can ask them in the comments and we'll get to them at the end of the conversation. And don't forget to tell us where you're tuning in from. We know you've signed in from all parts of the world. Usually I'm in the Middle East. Today I'm actually in Washington, D.C. But we'd love to give you a shout out right back. So tell us where you're tuning in from. And if you have any advice around project billing, experiences you want to share, don't hesitate to add your thoughts in the comments as well. And we'd love to share your insights. Okay, now please join me in welcoming Adam Mayo. Hey, Adam. Thanks for joining us. Good to see you.
Yeah, likewise, Fritz. I'm disappointed there's no bow tie on, though. I thought you'd still have it.
I need some practice in tying my bow tie. So, well, maybe next time you're on, we'll both wear bow ties. I'll send you instructions.
We'll tie them during the session to see who
That's
hits
right.
the time limit. Yeah,
That's right.
it.
Okay, cool. All right. So last time we talked about project accounting, and what I want to talk about right now is what is the relationship between project accounting and our topic of today, project billing.
Yeah, as we were discussing in the previous session, billing is a big component of project accounting. It's really, if I were to put into pillars, one of the main pillars to drive how we translate the contract with our customer into how we're going to invoice them and all the different components that go into it. So it's really that piece of it. The other parts of project accounting are focused more on the cost tracking and capture and how that affects project profitability. But again, when we look at that project profitability, it's the cost and then the billing and revenue that's driven. So that's really where I look at it, that piece of the pie when we're talking about it. And I consider costs, of course, are going to be critical as part of project accounting, but the billing component of it, we don't do invoicing correctly, it's going to delay billing, perhaps not get paid, and hurt our cash flow. So very big piece of the project accounting.
Sounds really important. What are the general types of service billing, and how does service billing differ from what product-based companies do in terms of billing?
Yeah, if you think about product companies, they're selling a widget, or we're reselling a product. Let's say we're a wholesale distributor, and maybe we're adding some markup to that item, or even a software company. Typically, they're selling some sort of license that has a set dollar value, depending on the number of licenses, or a subscription that we're selling. And in those cases, again, it's a fixed amount. For software, we might be billing it out, monthly, quarterly, annually, but again, we kind of have that defined. So conversely, services tends to have much more variety because there's so many different variables that go into delivering a project. So we have labor hours and fees, and we have our pass-through costs and travel expenses, just to name a few. So to kind of simplify it, I like to break it up into two buckets when we talk about services billing. You have your fixed fee or time and materials. And fixed fee is going to include, probably in the simplest terms, let's just take a flat amount, and hopefully it's not just a finger in the air. Oh, this project's going to be 20,000. But generally, we'll say we're going to deliver this project, these services for that set value. From there, we can start to look at how we might bill that based off of certain progress we make on the project. So things like a percent complete is very common, where as I achieve a certain percentage of the project, we'll bill you increments of that $20,000 contract. Another kind of example of that might be what we refer to as milestone billing. And so let's say we have 4 key milestones on our project, and once we hit each of those, we're going to bill out $25,000, or in this case, let's say 25% of that 20,000, right? So then each milestone will bill out $5,000. And then, when we get into more of the time and materials, that's where we refer to kind of the billing for the actual effort. So we're looking at the labor hours that our resources worked on the project and assigning a dollar value to it, as well as any sort of pass through, again, expenses. And it gets, it can get certainly pretty complicated when you get into labor, because how you determine that rate really has a lot of variety. It could be by the employee has a billing rate, might be by kind of a rate card where we're saying the type of resource you are. A project manager bills at this rate, a technical consultant bills at that rate, and we also might bill by the type of service that you're doing. So it's not really kind of the hat you're wearing, it's what you did for that particular customer. And then expenses, we can have markups and try to determine which ones we're going to bill out, which ones we're not. So as I kind of think about it, there's just so much different variety. And then to make it all even more fun, sometimes there's a mixture where we have one customer and we're billing out fixed fee and time and material. So there's a lot to think about.
Right, and hopefully with experience and time, you get better at making sure that the way you build those milestones or the time and materials out, you can you don't actually end up losing money
Right.
by doing it. Yeah, we have a few shout outs here. Rick Grove says, hey Fritz, long time in Western North Carolina. I think that's like one of those references to long time listener, first time caller. So long time watcher, first time commenter, maybe. From Alini in Athens, Greece. Hello. From Elisa, hi from San Diego, and from Alexander in Kiev, or Kiev, I guess is how you say it these days. From Stephen in Charlotte, North Carolina, and Nolia in Uruguay, South America. Wow, we got people from all over the world. Thanks for tuning in. And then hi from Spain, from Evelyn, and from Roshan, who says hi, Adam, specifically to you.
Awesome.
So great. Thank you guys all for tuning in. Please comment. Maybe we can hit all the continents today. Diving off of that last answer, what's the typical project billing process, Adam?
Yeah. So again, a lot of it is translating the contract that you sell with the customer and making sure that we can then build out how we're going to invoice. And so as you can imagine, when we're going to do a project for a customer and we're providing a service, there's a statement of work, and it's saying these are the different deliverables that you have. This is the effort that it might take, and it might be high level or it might be very granular, where we're getting down to the specific tasks and resources that are going to be working on your project. But that's going to spit out a dollar value typically, and then we're going in as, let's say, a accountant, as a project accountant, if we have dedicated resources to do that, and we're putting that into our ERP, our finance system, to be able to then automate or drive the invoicing process. And so, again, it's determining what's the rates going to be as timesheets are entered in against a project, making sure that we're monetizing those based off those rates, tracking any sort of expenses. If there's any sort of fixed fees, again, setting those up so that we can then put those on an invoice and send that out to the customer.
So, this sounds, a lot of this sounds very complicated and dependent, of course, on all the different kinds of contracts, but why do it this way?
Yeah, the simple answer in many cases is because they have to. And part of that's kind of the power dynamic, especially for smaller services customers, working with their and customer, I should say services businesses. Their customers are kind of demanding that that's how the invoices are presented. So they need to have it a specific way. Part of it's kind of a competitive differentiator. If they're willing to be more flexible in how they do the invoicing to their customer, they may win the business versus someone that's going to have maybe same type of pedigree, but is a little bit more inflexible in how those invoices are sent out. So really being able to meet the demands of their customers is a big driving power behind it. And part of it also is kind of being able to do analysis on the business. You might say, well, why not just make everything a fixed fee. It's the most simple component of it. But fixed fee also brings on more risk oftentimes to the service provider. If they get the work done ahead of time, then great, we're probably going to make profit on it. But maybe if we're a bit behind and we said we were going to do the work for a set dollar value and we've now exceeded it, trying to go back and renegotiate that contract can be difficult to do. So a lot of different factors kind of go into that process as well.
Before we get to audience Q&A, one last thing is, just can you outline maybe just quickly some of the main things that could go wrong in all of this? Or what are some of the challenges?
Yeah, you kind of keep on hammering home the point too of the complexity, and probably because you're just listening to me ramble on with some of it. But again, it's not consistent oftentimes, especially for smaller services firms. Again, we have an accountant, maybe a controller, finance folks that have other day-to-day activities to do as well, and then they're also part-time the biller. And they're working perhaps also in different systems. So one of the things I mentioned as far as driving, let's say, a fixed fee, are the deliverables being met. The milestone was accomplished and now I can bill. Well, generally that's not being tracked in a finance system. So now they have to reach out to the project manager, either via email, phone, or log into some sort of project tool where we're maybe capturing that. And then also if we're billing out time and materials, again, we may be using a different system for timesheets, maybe a point system for expense reports. We need to collect all of that and then enter it into the finance tool, not only for costing and those purposes, but now we need to add the billing value. And so, of course, naturally, if we have multiple systems, there might be errors as we re-key in data. We might miss time and not be able to bill it out to our customer. So really, the gamut of all the potential gotchas are available.
Okay, we're going to open this up to questions from the audience. If you have them, please keep commenting and also keep shouting out. We haven't hit Antarctica yet, so we're waiting for that day, but we'll do our best to say hello and answer as many questions as we can in the remainder of our time. And as we kind of queue those up, Adam, I have sort of a selfish obligation to ask, how does NetSuite handle or help with the challenges you just outlined?
Yeah, billing automation is really where NetSuite helps. And the way that we're able to automate is having all of it set up in the same system. And so being able to set up your project and right on the project, be able to create billing rules. And we have an engine that supports fixed fee, time and materials, where you can add rates to your hours and also mark up your expenses, and also even put in things like caps. So a big piece of time and materials might be that I have a not to exceed. So I'm going to bill you for my labor, but once we get to this threshold, now I need to go and renegotiate, or we're going to have to eat some of that. So being able to put in those tools so that it's really the set it and forget it mentality. A little bit of setup on the front end of creating the project, but then as we input the data, time, expense, as project progresses occurs, that's going to drive the invoice creation for us, and also include things like project manager level approvals on those, because generally they're the ones that are going to be that first line of defense with the customer if they have any questions or disputes on the invoicing process.
Got it. Some more shout outs here. Rick, who tuned in earlier, the long time part, he was reminding me that we know each other from having worked together a long time ago when I was on the media side, and we covered companies like NetSuite and talked about all of these issues. Gavin from London, England, as opposed to London anywhere else. Thank you for clarifying that. Actually, there's like a lot of Londons, I think. So I was not really being facetious there. Vinicius from Brazil, South America. Thank you. And from Yapo, I hope I pronounced that right, from Dubai, one of my neighbors in the Middle East. This is a question from Lisa, who I think gave us a shout out earlier. I think this is the same Lisa, might be a different one. How do you make sure that the milestone is achieved before you bill it?
Yeah, and so that's where we need to make sure that we have proper project management processes in place. And there might be certain protocol. One of the things that we often see with services firms is that they'll have a project management office that has certain thresholds as to dictating it. From a system perspective, generally, it's a checkbox, or perhaps you can, based off of hours worked against what you expected, that might trigger it to be marked as completed. But there's certainly other processes, whether again it's a checklist of some sort that will determine we've completed it, and then notify billing to send that out for invoicing.
Great. This is a great question from, well, I'm not going to, Valab. There's like an H on the end, I think, if we've put this in correctly. Still practicing my Arabic a little bit. Maybe it's not even Arabic. I don't know. What is the NetSuite module name that maybe we're kind of talking around here?
Yeah, so for NetSuite, we have a couple of PSA offerings. Our open air PSA, which includes full billing automation on projects, as well as Suite Projects, which is native to NetSuite, and again has a billing rules engine that's similar, that's going to provide that automation.
Great, and thank you for that question, Balab. And if I mispronounce it, please correct me in the comments. I'm happy to make another stab at it. Although I don't always get the second one right either, as we now know. All right, next question is, what's the benefit? We kind of talked a little bit about this, but let's kind of bring a fine point to it. What's the benefit of tying project accounting and billing to something like an ERP like NetSuite?
Yeah, again, simplifying the amount of systems is going to provide more automation. Ultimately, the biggest benefit is improved cash flow, typically, because we mentioned all the potential error-prone processes, the bottlenecks that can delay billing. And so, if it takes me an extra month to be able to compile everything to get the invoice out the door, that's another month removed from when we did the service. So the customer might be scratching their head. Did this person really work? Were they on site? I don't remember this particular thing. And now they're going to perhaps want to talk with their project manager to make sure everything looks right, or potentially even dispute. And worst case, there actually was an error and we did bill something incorrectly. And so again, having everything in one spot is going to reduce the data entry. We'll spit invoices out much quicker and hopefully get paid quicker as well.
Yep. This next question is from Reg. Is there a benefit to using a system like NetSuite for project billing if you don't have, say, a designated project accountant?
Yeah, I'd say even more so if you don't have a designated project accountant. Generally, you'll see that once you start to see services firms grow and they now need multiple people to focus specifically on setting up the billing and revenue recognition on a per project basis. But especially for smaller firms where maybe, again, it's someone wearing multiple hats in the finance department, perhaps the project manager is doing some of the billing as well, having a tool like NetSuite to have it all in one spot, have it automated using billing rules. And another component that I didn't mention is templatizing this so that every project you create in the system can already have a lot of the setup done. And then you're just kind of tweaking it based off of what you sold for that particular contract. So it certainly, I think it's a big benefit having that in one spot.
Yep. And we, by the way, we just came back from Suite World last week in Las Vegas. And one of the things that we showed in the product keynote was an upcoming feature called Project 360 that I think is pretty exciting as well. And that keynote is still available at Suite World on air, on demand. So check that out. And just a quick thing to learn more about this topic, a lot of great interest here, and thank you for that. We have a link in the caption that I think will help out a lot. So with that, that's all we have time for. Thank you for joining us all these weeks, Adam. It's been a pleasure having you here this month.
Likewise. Thanks, Fritz.
Okay, and for anyone who wants to connect with Adam, we've tagged him in the description of this live event. And as always, a big thanks to all of you for tuning in. We begin a new adventure next week. We're going to be diving into all things analytics. We made some announcements around that as well last week. We'll have our experts, Mark Holliday and Yoav Bali. That is happening Tuesday, November 2nd at 12:30 p.m. Pacific time. We'll see you then.